So in one of the latest Trading 212 app updates, we got this new rate of return graph, which has been a love and hate for the community. Some people love it, but some people swear by it that it is the worst thing that's ever happened to them. Personally, I think that's going a bit too far, but in this video, we're going to go through Trading 212's more controversial new update and their new rate of return graph. Now, of course, if you don't have an account with Trading 212 and you'd like to sign up and receive a free fractional share worth up to £100, you can always use the link in the description box down below. Alternatively, if you've already signed up to Trading 212 in the past 10 days and haven't received a free share, all you have to do is to click the 3 horizontal line menu over here, scroll all the way down until you see the use promo code section, and in this menu just enter my code JUBAIR. So here we are, as you can see from this graph. Of course, you can easily change the axis of the graph to get a 1-day view, a 1-week view, a 1-month view, 3 months, 1 year, and max. Let's just stick to the maximum recorded time period. As you can see, I started with Trading 212 basically on the 1st of September 2022, so well over 2 years now. And since then, my rate of return, Trading 212 calculated anyway, is a positive 78.2%. Now, if you told me what I thought my rate of return was in my Trading 212 Invest account, I'll tell you it will be something around 40%, which I think is around 20% per year, give or take. Now, according to their calculations, this is of course a lot higher. And also you can see that my net deposits are around £15,057. Now, it is worth mentioning that I have received around 113 free shares into my Trading 212 Invest account, and that will be counted as a deposit, as of course it's deposited into my Trading 212 Invest account. So since then, I no longer run with this promotion. I have a separate deal with Trading 212, so you'll no longer see any more coming from free shares. Just thought I'd add that for you. So even taking away that £1,700 from my net deposits, I guess that's still above 60%, which is well over 30% per year. And that kind of makes sense because personally, I thought I had been quite profitable with my Trading 212 Invest account. For example, if I go into my histories and go into orders, you can see that I have realized a profit and loss of a positive £4,166. This is from me trying to time the market. I personally get a lot of entertainment from that, and it's not something I would recommend, but I've always found out for me personally it has worked out, and £4,166 in profits will surely give me a nice increase. Every time I sell and make a profit, that gets all reinvested, and that's why a money weighted rate of return will be a better calculation for me personally, rather than if I lump summed £1,000 or £10,000 at one go and then worked out my investment like that, which pretty much no one in the whole world ever just does that. They tend to invest over time, pound cost average, or even, the odd birthday or so, put some money in. That's why I think personally a money weighted rate of return is actually much better. You can also see that I've earned £284 from dividends, which of course counts towards the profits or gains from an investment account. Furthermore, of course, with uninvested cash on Trading 212, you do get interest. In total, since having my Trading 212 Invest account, this has been a positive £380. So basically, since starting my Trading 212 Invest accounts, including any money that I've withdrawn, which is actually not a lot. One time I took out, I think, £500 and I put it back in anyway. So I've made £7,138. Considering that I only deposited £15,057 and of course £1,700 in free shares, I've made a pretty decent rate of return, and that is reflected by this number over here. Now here is my Trading 212 stocks ISA. If I go to maximum, you can see my rate of return is 33.4%. Now it is worth noting that, if you transfer from a different provider, your historic data will actually go, and that is why every case is unique. You can see my net deposits are £99,628. I did transfer £59,628 and 32 pence from another provider, and I deposited £20,000 each tax year for 2 tax years in my Trading 212 stocks ISA. And since then, my rate of return, any profit that I've made has been £12,554. So my rate of return is only 33%, but you have to take into consideration that my historic data from my previous ISA is not included. I believe whenever you want to answer for yourself what your rate of return is, you have to have a very nuanced approach to it, as you have to take in all of these things into consideration. Otherwise, you're never going to get your real, true result. And Trading 212 will not know this. They don't take your personal circumstances into consideration. For example, if you trade a lot of different shares and you buy lots, they have no way of knowing which exact share you've sold out. This is a problem that I've had with other providers, and it's something that will never be solved because it's physically impossible to know which share you're selling if you have multiple and you sell different ones at different prices. Previously, Trading 212 will only calculate basically your open positions. Let's say I had a few shares in Apple and they were up by £100. That will come up as a positive £100. And even if I sold thousands of pounds worth of shares before, that wouldn't come up on this graph here. So now with Trading 212 in your portfolio chart, you get the total value, which is the value of everything in your portfolio, including investments and including your cash. Previously, it was separate. So for the return, the total profit or loss from your current and past investments are included, including your dividends and interest on uninvested cash. So the rate of return, let's talk about that, is the percentage of growth or loss in your portfolio adjusted for the impact of money you've added or withdrawn. And here explained, your net deposit is the difference between the cash you've deposited and withdrawn. In your portfolio chart, the return is the total profit and loss from your activity, including investment performance, any dividends received, any interest on uninvested cash, FX fees and stamp duties taken away from that, of course, any free share bonuses like I talked about, that is included in the deposits, and cash back from card purchases, that is included in my investment return. Perhaps that shouldn't be included in my investment return, but then again, I've only maybe made around £30 from card cashback, so it wouldn't make a huge difference there. But if you are a huge spender, that could affect your performance data. So let's talk about money weighted rate of return. So the money weighted rate of return measures your investment performance by accounting for when and how much money you add or withdraw from your portfolio. So why does Trading 212 use money weighted rate of return now? So of course, this is a personalized performance. So the money weighted rate of return adjusts for your specific deposits and withdrawals. And this gives you a more true representation of basically if you are making a gain or loss in your investing journey. Okay, so let's go through the more mathematics side of this for people who are more interested. So let's compare money weighted rate of return to just a simple rate of return. Like I said before, it will be very easy to calculate if someone put in, let's say, £10,000 and then check their accounts 10 years later. Very simple calculation, but things do not work like that. I don't know anyone who just puts a lump sum in and never checks their account again for 10 years. If you are that person, then you are that person. But most people will put in £10, £20, whatever they have, get a free share here and there, get dividends, receive some interest, and that adds to your total return. So let's go through the first example, which is adding money during the year. So if you start with £1,000 and then let's say you received a birthday present of £500. So you start with 1,000, you add 500, and towards the end, you'll have 1,600. And that is how much you've actually deposited. So the simple rate of return calculation will be your return is equal to the ending value minus the starting value, and then you divide it by the starting value. That's just a percentage difference there. For example, £1,600 minus what you started with was £1,000. Divide that by 1,000 and your rate of return was 60%, simple rate of return that is. But with a money weighted rate of return calculation, this adjusts for the £500 that you added halfway through the year. With a simple rate of return calculation, it doesn't take into consideration when you actually added that money, and therefore it can give you inflated results. So with the money weighted rate of return, the £500 invested is only for half a year. So the actual return is closer to 20%, and that provides a more accurate measure. So conversely, if you withdraw money throughout the year, you can have a different value based on your simple rate of return or money weighted rate of return. For example, if you start the year with £1,000, you take out £500 mid-year, but your end value is £1,500. Of course, you've made quite a bit of gain there, but with a simple rate of return calculation, your return will be £1,500 minus the £1,000 divided by £1,000. So the simple rate of return would say that you returned 50%. But of course, it doesn't account for the £500 you withdrew. So with a money weighted rate of return calculation, this adjusts for the £500 that you withdrew mid-year. This shows that less money was invested for part of that year. So when considering your actual return, this is actually less than 50%. So the main thing to consider when looking at money weighted rate of return is that time plays a big factor in it. If you deposit at different times throughout the year, then your return should be reflected based on that, as opposed to, investing at the start of the year. Life is relative to time, and I don't think this graph is different. Personally, I prefer this rate of return, but if you really want to get the most accurate rate of return, I suggest making your own spreadsheet, because then you can always see when you deposited something, you can make your own calculations, and you're not up to the mercy of these platforms, which will never ever have all the information required to give your exact specific returns, because only you can calculate that. So make sure to check out some of my other videos, and I'll see you in the next video.